Hi, good day, everybody. Hope you're having a fantastic week, and welcome to April's version of Property Watch. We're looking at the impact of the coronavirus on the Australian property market, and more importantly, looking at what the potential impacts of this whole crisis on you as a property owner. So, welcome, and I highly recommend you to subscribe to our YouTube channel or Facebook page, whichever avenue you're currently accessing this video, to ensure you have access to future updates as well, because we actually do daily updates as well as monthly and weekly to provide you the most up to date information. So, just to get started, um, I just wanted to take a moment to remind everybody of this quote by Victor Hugo, which says, "Even the darkest night will end and the sun will rise." So, let's begin with that more optimistic outlook in mind, whilst we look at a truly unique time in our nation and the world's history, as literally the world stopped in 2020. So, as what I mentioned before, what we'll be going through is really the impact of the virus so far on the Australian economy. And secondly, what the impact on overall property value, and therefore, most likely, what the impact on your property value specifically will be. And finally, some ideas on options you can take forward for yourself, and just some things to watch as the situation develops further. So yeah, with that, I guess let's get started. And this is, I'm just going to move my face out a little bit. So this is just a legal disclaimer saying that all of the information in this presentation is personal opinion, and therefore, obviously, please do your own research before you take any action that may affect your personal circumstances. So, with that in mind, let's actually dive into the content. So let's have a look at what's been happening so far. So it hasn't been a pretty picture for the Australian economy. So the reason why we look at the economy first up is whatever happens in terms of jobs or wages and ultimately the property market is very much linked to what's happening with the overall market. And obviously if people have jobs, if there's income and actual business transactions happening, then the economy is alive, and therefore that usually encourages property activity. But if the economy is not happening, in this case, if there's a recession potentially happening here, then ultimately that will weigh down on the property market. So because of, I don't think I need to give too much background because everybody's living the reality of this coronavirus right now. But essentially, what's been happening as a result of it is everybody's, pretty much either working from home or a lot of people have lost their jobs. And where did that come from? So if we have a look, so nearly half or 45% of Australians who are in their working years, 18 years and above, have had their household finances impacted, which is pretty much a lot of the country. So pretty much one out of nearly every two people will be impacted negatively from a finance perspective due to this crisis. And why did that actually happen? So 2/3 of Australian businesses reported reduced cash flow for that period. What that means is business either reduced or had a downturn, which means that people's jobs were either, once again, hours reduced, suspended, made redundant. It's just the entire economic activity in Australia has been severely impacted, as we all are aware of. And as a result, in terms of where Australia stands from an international perspective, the dollar has been the lowest in almost 11 years during April. So, pretty much in terms of Australia's local economy, we've been severely impacted, and where Australia is in terms of the global economy, we've also been severely impacted. So, unfortunately, that's a reality we're facing right now. And if we look at once again, what I was talking about in terms of people's actual income every week, so wages and jobs across the country, the data has only been released by the Australian Bureau of Statistics until early April. So we haven't really seen the full impact of the full April um, performance so far. But right now, today is the 2nd of May as I'm recording this. So we hopefully will see more results come out during May to see the full impact during April, which is when all of the quarantining and restrictions were introduced. So if we have a look at the actual data here, we'll see that actual jobs decreased by about 6% for the overall economy, and total wages paid decreased by 6.7%. But just knowing that this is only the early impacts of the virus because we don't have the full data set just yet. So let's have a look at what the actual impact is on the property market. So a lot of this data is once again more early April, and I've just added some new data at the end of April as of yesterday. So this is all very fresh off the press. So pretty much the actual performance of the market has been clearly impacted due to all the coronavirus restrictions. So because of the restrictions, people can't really attend any live auctions or have groups of people go through in open inspections. The auction clearance rates are at an all-time low because of that impact. Which obviously really affects the sales process, because usually a property is sold by private sale, auction, or that's really the two main methods. But now one of the main methods, which is auctions, has been severely impacted, which will obviously impact on property prices and also the speed at which properties move off the market. So this is fresh data as of pretty much 2 days ago, and this is what the house prices and house values have been doing all around Australia. And because we've seen a severe impact already from the economy, as per the first few slides, we actually, from this table, we see very small impacts on the property market. So that's because there's an actual lag. So if you look at general economic performance of Australia versus usually what the property prices will do, there's usually a lag. And I have a graph later on that demonstrates that from the 2008 GFC, which we have already seen and gone. So if we have a look at what's happened during the month of April, so month on month changes, there's been very little change. And in fact, Melbourne, which is a major capital city, has gone negative in terms of growth. So property values have actually started to decrease a little bit. But because the market has been going pretty strong from the beginning of the last year, so 2019, actually, probably about the middle of last year to now. So overall, if you look at quarterly changes and annual changes, overall for most cities other than Perth and Darwin, there's been an overall still positive increase up until the end of April. But what will happen after April remains to be seen because of that lag between actual economic activity and finally property market activity. So also with the restrictions being introduced, that impact seems like it's yet to be seen by the market for now. So we'll keep an eye on that, obviously. So I guess where we're heading with the property market, we can already start to see with just the number of properties on the market. So right now, what is happening is the oversupply of housing is building. So if we look at this chart that's on our table, we have a number of new listings. And then if you have a look, because it has the data from all the last 5 years, generally the property market follows this curve. So we have seasonal impacts, as well as, political and other economic impacts. But generally there's the same shape from the number of new listings every year. But if you look at 2020, So the reason the graph is going really low in May is because May hasn't started yet. So I'm not really sure why they have that point there, but essentially, the curve has followed every other year. So there's pretty much the same listings of residential and commercial. I think this is just residential property. So there's the same listing of residential properties as per every other year. So unfortunately, these existing listings are not sold and settled. So CoreLogic, which is Australia's biggest data set or company that holds housing data, they estimate that settled sales so plunged by around 40% in April as buyers reduce purchasing. So even though there's still the same amount of properties as every other year, or definitely as per last year, there's 40% less buyers who are actually paying for them or actually putting in offers. So there's about 40%. That what that means to me is 40% more listings than last year that hasn't been sold yet. And this is just April. So this is just the beginning of the lag between what the economy is doing and what the property market is doing. So this is the tip of the iceberg. And then, so due to all this happy news, the government, Australian government, has obviously responded very strongly. Overall, from all of their stimulus that they're offering, they I think are injecting about $320 billion, which they're generating fundraising or borrowing. So essentially they have to raise this $320 billion from somewhere, right? So it's mostly from debt, very little from equity. Um, and other things to help stimulate the economy is the Reserve Bank reduced the cash rate to 0.25% during April. So what that means is borrowing for real estate or even business loans is very cheap. The rate is very low. And obviously, to help the everyday Aussie, a lot of government stimulus package looks after the everyday person, such as the job seeker package. So if you already had a job and your employer has had issues due to business impacts to pay your wage, the government actually subsidizes your wage or salary uh, to the employer so they can keep paying you as per before. And for people who have been made redundant and were already employed and had issues finding a job, then there's the job seeker package by Centrelink. So that's all Centrelink. So we will put it in that category. And as a result, obviously that's had huge impacts on people's living situations because people find it harder to pay their rents and mortgages. So things are that, for example, many states, and every state will vary. So you will really need to check state by state on your individual application of this. But the national, at least, government proposed a 6-month moratorium on evictions for both residential and commercial tenants, because obviously small businesses are the commercial tenants. And also just lots of extra cash and grants injected for households. So one of the other things that people are also accessing is superannuation, because usually you can't really access your superannuation until you either have obviously reached your natural retirement age, or if you have extreme financial hardship. And this is one of those extreme situations where potentially a lot of Australians will be or are already in extreme financial hardship. So the government has made it slightly more accessible for everyday Aussies to access more of their super. So in this case, you can access not all of your super, but up to $10,000 to help you with a cash injection for Aussies who are unemployed. And also, so just a lot of sort of encouragement by the government to make that process easier. And that application process is actually from if you're trying to apply for this early superannuation access, it is via the ATO. Interesting, you think it will be just to whoever your superannuation provider is, but it is actually via the taxation office. So I guess overall, what will that mean for your property specifically, right? Yeah, I know it's such a positive news that I've just delivered you, but something that I just wanted to remind you of is your specific property value is not just determined by the economy. So I mean, it definitely is impacted by the economy, what I call bigger picture in terms of supply and demand. So obviously, it makes sense that if there's a lot of other properties on the market, it will definitely sort of be an oversupply, which means that there's a lot more choice for a buyer to be like, okay, well, I'm out to buy a property. I have, instead of 10 to choose from, I have 100 to choose from. So that will erode pricing and value of property. And also the economic conditions, which are not great, what we would call bullish. Yeah, potentially Australia could go into a recession. We don't, no one's made an official call, but that's very likely. That will actually reduce the number of buyers out there, right? Because now that people's um, income are impacted, they're not really thinking, oh, great, it's time to buy property for first homeowners. Investors and people who are out there for a good deal will still be shopping around, but a lot of the buyer demographics, which are the first home buyers, will move out because their focus may no longer be on buying a property. Their focus will be really on keeping a job or even finding a job. But the second thing that impacts your property value, I wanted to remind everybody, is also specific things to do with your property, like the location of your property, the condition of your property. So if your house is the best house on the worst street, that could mean that it will, obviously have a higher value than the average house on your street. Or unfortunately, if your house is not in the best shape compared to other properties on your street, then obviously that has an impact on the value. So if the average value is a certain price, it could actually be lower. So other things, obviously, where is the suburb? Some suburbs are closer to school zones, some transport to the beach suburbs. What is the block size? Is your block a normal block compared to suburb average, or is it smaller or even bigger? So there's really a range of factors that go into the final valuation, which is why people are actually licensed property valuers, because they need to take all of these things into account. Oh, and this is also what I wanted to remind people in terms of what happens to house prices overall. So I took some data from the 2008 2009 global financial crisis, and this firstly demonstrates the what I call the property lag between what happens in the economy and what actually happens to the property market. And I mean, if we take our mind back to 2008, 2009, which is, more than 10 years ago now, but if we take our mind back to that time, you can vaguely remember that Australia was relatively insulated. So we were slightly saved by the mining boom we had. So compared to the US and other countries, we actually fared pretty well, but we were definitely still impacted. So if you look at the red portion of this graph, this is the change in house prices year on year. Really, we reached a peak of house prices still in March 2010, and then everything started to go a bit pear-shaped down until March 2012. So it took about 2 years for a slump. And if you actually remember, the official timeline of the GFC occurred around end of 2008 and 2009. So I mean, really, Australia was insulated from the actual crisis and therefore the economic downturn for almost a year to 2 years until that actual fall started to occur from that peak price in March 2010. So that clearly demonstrates, there's a huge lag, or sometimes huge lag, sometimes potentially not, because we're already seeing some decreases in property value already from the coronavirus. And then and the second box you see on this graph is more the yellow portion, which I wanted to highlight, for the recovery. So the recovery pretty much took about around the same time that it did for the prices to fall. So the recovery was March 2012 until about March 2014 for the initial recovery. But if you have a look, I pretty much cut off the recovery once house prices went back to normal for Sydney. But if we look at what the prices did for combined capital cities, the cities never really truly recovered back to the original levels, and neither did Melbourne. So we would say that Sydney is doing, has its own unique macroeconomics, because it is, very world renowned for really being an icon of Australia. And I say that painfully since I live in Melbourne, but it is a reality. But if you look at what's happened further down the graph after those 2 years of recovery for Melbourne and every other capital city, it never really quite went back to the original levels. And Melbourne probably got as close as it did to its original level, another 4 years later. So if you look at, from 2012 to about 2016, and then it reached another little peak in 2017. So what I'm trying to demonstrate with this graph is that the recovery sometimes takes about the same time or even longer for property prices for most markets, with Sydney being the exception. So we'll see if Sydney beats the rest of the market again with this current economic challenge, but that remains to be seen, I guess. And the next question is, what will happen, right? Do you have a crystal ball? The answer is no, I don't have a crystal ball, but here's some very calculated and educated guesses at what will happen. So we look really at these times to economists to see what will happen to the overall economy, and therefore what will potentially happen to the real estate market. So the AMP economist Shane Oliver said that if we actually have a recession more than 6 months, and if the unemployment in Australia go up to about 10% or more, then house prices could fall by up to 20%. So these are, that prediction is made with the prior two conditions. But unfortunately, so this was more during March that he said this. Unfortunately, the RBA and I actually forecasted during April that potentially our unemployment levels will be at 10%. So one of these conditions is potentially true from what everybody's indicating. Whether the recession will last more than 6 months, we'll see. And the NAB's chief economist also said, that he expects unemployment in the order of 12%. So unemployment is not looking good from what everybody is appearing to say. And PricewaterhouseCoopers, which is one of the big four accounting firms, have said that they estimate that the overall economy for Australia will reduce by 34.2 billion, or about 1.3% of the overall gross domestic product of the entire country. Once again, this was during March, so we'll see if they have updated this prediction. But just to remind people of what actually happened during the GFC, which by that time, as I mentioned, we had the whole mining boom helping us there, that our GDP still declined about 5.2% during that time. And we currently do have the government putting a lot of stimulus and extra cash to keep the whole economy going. So we will see what the impact of that is. But just from a whole basic economics concept, if you guys are not familiar with it, whenever the government steps in and they have to raise a high amount of cash or debt, um, from other sources, usually from foreign sources, or they have to borrow from the Reserve Bank, essentially printing money, right? And creating money out of thin air. What that usually does is that erodes the value of money that's already in the economy. So imagine we already had, just pulling these numbers out of thin air, we had $200 billion in the economy already, in the Australian economy, that everybody's exchanging and spending on goods. But now you suddenly put another 200 billion without putting anything, right? So you're not adding extra value from extra products or services or creating new industries. You're just literally printing money. So usually what that means is now we have 400 billion, so twice as much money in the economy. So that you should erode the value of the previous 200 billion by half. That's just a basic model of how the economy works. But because of other things like inflation and interest rates, it won't be eroded by half. And from the model that I quickly just used as an example, that generally just shows you what the negative impacts of printing money does. So, but then obviously we need a stimulus, especially at this time, to keep everybody going and keep everybody sane. So I understand definitely the necessity of doing this. But I guess I just wanted to also highlight on the long-term impacts of what printing money will do. So we will have to face the realities of those consequences later. But right now, let's focus on, facing our challenges now, because they are quite immense as they are right now, or we'll have to face those problems down the line. So right now, hopefully that gave you some tips and insights as to what the economy of Australia is doing, therefore the impacts on the property market. Also, some of the options available to you in terms of grants, and also Centrelink payments available to individuals and if you have a business, on what to do. I will highly recommend, if you found this helpful, if you even learned one thing today from this presentation, and you want to learn even more things, to subscribe to our YouTube channel and Facebook page for even more updates, free resources, and helpful videos. And we now have daily, business daily updates, where we really keep you updated to what's happening with the coronavirus, its impact on your property value, and also what's happening with the overall economy in Australia and the world, because ultimately all of that could impact on your personal life and personal assets that you hold. So it's been my pleasure to spend this time with you. And I put this quote here by Ralph, just to remind us that what you're afraid to do is a clear indication of the next thing you need to do. So maybe there's something you've been putting off, or there's something you really need to apply and look at or face during this very difficult time that, and I totally understand, because I sometimes do this myself. I procrastinate and I put it until the last minute to do it. But because currently we're in a crisis, potentially what the fear or points to the thing that you need to actually face the most, and it's the thing that you really need to do next. So what is the next thing that you need to do that will help you and your family in either the short term or the long term timeline? And I really hope, and I hope you have the courage to do that. And I wishing all of you and your families health and wellness during this time, and have a fantastic rest of your week, rest of your month, until our next update. Thank you.